Went to the Harris County. Well, we're in Harris County here, Houston, right? Went to the Harris County assessor's website, and I got there's ways that you can filter out like different owners, different entities, and that type.
There is a new American dream, one that doesn't involve working till you're 65 before you start enjoying life. If you're someone looking for ways to regain control over your time and check off that bucket list now, you're in the right place. We share tips from experts on investing, personal finance, and mindset so that you can finally have the freedom to work less and live more. This is the Freedom Investing Podcast with your host, Chris Toribio.
What's going on, everyone? This is Chris Toribio with the Freedom Investing Podcast, and I'm so happy you're here to join us for another amazing episode. If this is your first time tuning in, welcome to the show. Please make sure to hit that subscribe button so you can stay up to date with our latest episodes. Moving on to today's guest, we have Juan Vargas. Juan is an accredited multifamily investor based out of Houston, Texas. He has been involved in all aspects of real estate investing within multifamily since 2016. He's transacted on over 1,600 units valued at over $125 million throughout Austin, Dallas, Houston, and Phoenix, and is a JV partner on an additional 500 units throughout Texas and Georgia. In addition, he is a limited partner on over 1,000 units. Juan heads operations and asset management at Genwealth Capital Group and is heavily involved in acquisitions through broker relationships and strategic partnerships. Juan, welcome to the show, man. Before we dive into it, give us a quick 2-minute rundown of who you are, your background, and where you are in your journey to achieving time freedom.
Yeah, no, hey, it's my pleasure. I certainly appreciate it, Chris. It's a pleasure to be here on with you and try to, my goal is to try to, provide some information and value to the listeners out there. So, a little bit about my background, a little bit about me, native, Houstonian, Texan, born and raised in the area. My background, actually was in automotive. Worked with BMW for a few years, well, several years actually. Did that for a while. But like any job out there, I mean, there's a limit, there's a ceiling, right? And so for me, I saw that ceiling, and I wanted to see how I could, I guess, branch out and try to create some passive income, and real estate was what really popped up for me. And so I actually got my start through single family, actually. And I had a couple of rentals, and but then I quickly realized that single family wasn't the route for me either. And before we knew it, I was in multifamily.
Wow, that's amazing. And so it sounds like you were working with BMW first. And then how did you first position yourself to buy that first single family home? Like when you first just got started?
Yeah. So when I first got started, it was a lot of education, and it wasn't, I didn't really have a lot of time, right? Because always working, and I have family and those type of things. So, I went the traditional route, in the single family space. And what that is, going through a realtor and just, getting financing, putting, a certain amount down, and, of course, making sure the numbers work, right? Checking out what the rents will go for. And if my rents were, X and my mortgage and all my expenses were Y, and there was a little bit left over, then, it worked, right? And so that's the way I did it. And shortly after that, I found out that, hey, there's actually more creative ways of doing this. There's hard money loans if you need that. There's, there's wholesalers where you can find maybe, better discounts or homes or houses that are in repair, distressed. There's multiple ways. But when I first got started, I didn't know those. So I did it more of the traditional route.
Gotcha. And before you transition into the multifamily space, I mean, this stuff is extremely important, especially as we head into today's economy, right? I mean, deals are very tough to find, and you have to have that systems of acquisitions to be able to really find yourself the diamond in the rough that'll make that deal pencil out for you and potentially the investors that you work with, right? And so when you were investing in the single family space, I guess, how many single family properties did you end up buying before you realized, like, this may not be the route I want to go down. Let's go towards multifamily instead.
Yeah, I actually, I say I'm lucky because originally my goal was to have so the goal was to cash flow 150 to 200 dollars per house, right? And really the goal was to have, 40 to 50 houses, and that was the grand goal, right? It's like if I get to this number eventually, then I'm set. I don't necessarily have to continue to work here, or I can even leave earlier. And that was the original goal. But luckily for me, I only ended up going through two homes before I realized that, hey, you know what, this is not the right path. And how I found out really was a blessing in disguise. And I say that because I had a good resident in one of the houses, and so he ended up leaving. Right, he was in the military. He ended up going somewhere else, and which was fine. Right, he left on good terms. And after he left, I had to go in there and put some money back into the house to get it, turn ready and rent ready. And then I also had to cover the mortgage, right? It was being covered by the rent, but now I had to cover the mortgage and the utilities and all these different things, right? So then I just got to thinking, I'm like, you know what? Like, I literally just, I had this account over here that was a little flush, but now it kind of went over here back, for mortgage, for utilities, for repairs, for all this and that. And I'm like, and that's my fault. It's my fault because I'm relying on one person, and so this person is out, and now it's like it's 100% my fault. So I couldn't put the blame on anybody else but myself. And then that's when I was thinking, I was like, what if it was a 10 unit, and one person left, and I still have 9 other units, 9 other residents that are still covering everything. What if it was a 20 unit, right? Then I still have 19, and so that was the mentality that I took on. And yeah, and shortly after that, is when my mindset really shifted it into like multifamily and just pushed back to single family.
I love that. I mean, we talk about that in the show all the time, right? When it comes to the idea of scaling up and thinking bigger, oftentimes it can make for a much more safer investment, right? Because as you said, if you have 2 single-family homes, as you did at the time, one tenant moved out, you're already at a 50% vacancy. And so, as you're saying, when it comes to having the cash flow of maybe $150 to $200 per unit, the moment one person moves out, you're already kind of having to cover many of these expenses on a month-to-month basis until you get that other unit filled. But as you scale up, 10 units, 20 units, 100 units, suddenly the effect of one tenant moving out has a much less effect than you did when you only had 2 units. That's huge. And so after those 2 units, I guess, what did you end up doing? Did you sell those? What did your next acquisition kind of look like from there?
Yeah. So, from there, I was already, at that time, I was already studying multifamily, honestly, right? I was already studying multifamily, and, that resident left, and that's what really like just lit it up for me. Um, but so I started reaching out to brokers, right? And, reach out to them and, tell them, hey, look, I'm looking for multifamily, like in this size, from 20 to 50 units. And, do you have anything? And so it was difficult because they knew that I didn't have any experience in multifamily side. And so they wanted to see that because how does a broker get paid, right? It gets paid whenever you close on a transaction, right? And if you haven't done it before, then how can you prove that you can do it, right? So, it was difficult, and, they would send me some deals, but, as I got into the numbers, they were overpriced, they just were like in bad locations. They weren't a fit. And so after going through that for a little bit, I said, you know what? Let me just do it myself, right? Instead of me reaching out to brokers, let me just reach out directly to the owners, right? And so, I put a list together on, I went to the Harris County. Well, we're in Harris County here in Houston, right? Went to the Harris County assessor's website, and I got, there's ways that you can filter out like different owners, different entities, and that type. And so I just went to like, multifamily. I made a list, and then I did this, and the zip codes, and put all these different things together. Then I did that to other counties as well. And then I just, sent them some letters, like handwritten letters, and made sure that I put my phone number and my email and just multiple forms for them to reach out or reach back to me. And yeah, I actually had a pretty good response from those letters. And, the numbers didn't work on a few of them, but then there was one that where the couple was getting ready for retirement. They had just built, or they had built this property back in 1996. They're getting ready for retirement, and I just so happened to send them the letter at the right time. And so a lot of it is timing, right? And they reached out, and we built built a rapport, and the rest is history. And so that was a 32 unit outside of Houston in a tertiary market, but outside of Houston. And it was the 1996 build property that was a classic value add, all original, and they were just ready for retirement, and it was a good basis, and so that was my first multifamily property. And from there, just I sold the properties to the single family afterwards, right? But yeah, that was the story for my start in multifamily.
I love that. I love that, Juan, because very easily you could have said when you were networking with these brokers and getting these first deals that weren't penciling out, and you could have just easily been like, well, these deals aren't working. These brokers don't trust me because I haven't closed before. I'm just going to stick with what I know and stick with the residential single family since I know that that's something I can do. But instead, you chose to get creative. You chose to go through the Harris County website. You decided to kind of pull these lists and make it so that way you can reach out to the directors, out to the owners directly. And that's how you close that first deal. That's fascinating. And so I got to ask, when it comes to managing this 32 unit as opposed to those 2 units that you had before then, what did it look like from a time standpoint on managing those 2 units as far as how much time it took out of your day as opposed to managing that 32 unit, which is a lot more units?
Yeah, that's a great question. Well, 2 units wasn't much, right? If there wasn't any repairs that needed to be done, I mean, they pretty much ran on their own, right? The 32 unit, however, that was a little bit more time intensive. So that's something that you have to think about, right? It's more units, so it looks better on paper, but then you also have to look at the time that you're investing into it, right? And so because it was just a 32 unit, and I say it because for a lot of people it's like, wow, a 32 unit, that's huge, and it can be, but it's 32 units, so it doesn't necessarily support like a full staff either, right? So by a staff, I mean like a leasing agent, a manager, a maintenance guy, an assistant maintenance, or a porter. There's that's where we can support like on larger properties, right? But on this one, it's just a 32 unit. And we did have a manager that we were able to hire from another property, a larger nearby property, who helped us manage this property. But we still had to take care of a lot of like the, maintenance, or there's, an appliance that needs some repairs. Either we call somebody ourselves to go out there and take care of it, or I actually went out there because my background, in automotive, I actually went out there and took care of a lot of these things, right? So it was one of those things where it was fun, right? But then it's like, hey, how much time am I spending here where I could be using this time to look for other properties and just keep growing, right? So there's got to be a little bit of a balance, right? But to answer your question, yes, it was more time intensive. From just overall management to repairs and through capex that we were doing. And visiting the property versus just a couple of single family.
That's a really good point. And you make a good point there in that it's all dependent on perspective, right? Over here in Chicago, like nearly 40% of the housing stock is anywhere from 2 to 4 units. And so when you think of multifamily, a lot of people think of multifamily in the range of less like 2 units up to like maybe 10 to 15 units or so. So from the perspective here in Chicago, 32 units actually seems pretty big. But I do know when we visited down in Austin sometime last year, a lot of people were thinking like, oh, 12 units, 32 units, small. We're looking for the 100, 200 plus units, because for a lot of times in that market, that's what's considered multifamily and not considered single family in that unit. So it's always interesting to kind of see the different perspectives between the two. Now, you make a good point in that even at 32 units, it didn't have enough meat on the bone to support in-house staff, on-site maintenance, things of that sort. So moving forward from that deal, what did you do at that point to position yourself to close on larger deals? Did people see that now that you close on this commercial property, now you have a little bit more skin in the game, they treated you more seriously?
You know what? That 30 unit was actually it did help. It was just 32. I say just because we're talking about like Texas. Everything is bigger in Texas, right? I know, right? But it did help with some credibility, with brokers, and that was because it was like, hey, this guy has done it before, right? He's put his money where his mouth is. He's actually transacted. He understands the process. He understands operations a little bit, right? A little bit better. So it helped from that perspective. But from a lender's perspective, not necessarily, right? Because it's like, okay, well, you've done a 32 unit, but have you done a 100 unit? And that's where you need like guarantors or partners who have been there, done that, right? But yes, you're correct. And from that 32 unit, I wanted to get into larger properties. And so what I did was, I networked with guys that were already doing it at a larger scale, and so my goal was to try to provide some kind of value to them, and somehow become a guarantor, on the property alongside them, and that would in turn help me in the future, for my own properties. And so, yeah, that's exactly what happened, right? I built good relations with some of the guys in the market. They were just getting started, but they were, a couple of steps ahead, and was able to partner with them, and sign on as a guarantor, and that really helped to put my name, through the agencies, through Fannie Mae, Freddie Mac, and just really get the head start into larger properties, and then the rest was history.
I love that. And so I want to take a step back at this time and kind of really dive into today's market, right? Let's say I'm a new investor. Once I was in the same position as you were, where I'm working a W-2 job. I've noticed that there's a cap on either my pay or the amount of time that I can take off. Want to find a solution to providing more of those. What would you suggest to someone who's just getting started in real estate, in terms of both what type of property they might be able to take down, as well as what they would do in today's market with the rising rates, with the decreased cap rates, to kind of have a system for deal flow, so that way they can be successful on closing on the first deal?
Yeah. So the kind of properties that I would recommend. I mean, so there's a couple of things there, right? So I guess you would want to see what your goals are, right? It always starts with what your goals are, how you see yourself, right? Because it can take a lot of time, right? When you get into some of these deals. So ask yourself, do you want to do this actively, or do you not want to be involved, and you rather go golfing and fishing or whatever, right? If you want to be involved, then maybe you can, find your own smaller deals, right? Kind of like the way I got started, right? And maybe that's what what works for you, right? And but if you want to go golfing and don't want to be involved too much, then maybe passively investing is the right way, right? Because when you passively invest, with other operators that are already active in the business, there's not a whole lot that you need to do, right? You obviously have to study and build a relationship with the operator, but and then once you find a good opportunity that you trust and a person that you trust, then you go for it. But there's not too much to do from there. But whenever you're doing your own deals, there's a lot more involved in time is concerned. So you really have to ask what your goals are, and your family goals. All put all that together, and then maybe do a combination of both, right? Kind of like the way I have right now. Where I kind of do my own smaller, but then also do the syndication side, and then also invest passively, right? So I kind of do like really three, right? If there's a good opportunity, then I'll invest passively and do my own deals, with my partners, and then my own personal deals as a family, right? So a little combination of all, right? As far as your second question with today's environment, rising interest rates, it's tough out there, right? But I would say that there's going to be more opportunities in 2023 than we saw maybe in 2022 or the latter part of 2022, where there's a lot of groups that maybe were a little over leveraged, that may be a little bit underwater right now. They have a floating interest rate. where it's just much more expensive to service their debt now, or they didn't have a tight interest rate cap, and so it's pretty much has gone like wide open now, or they didn't have one at all, right? And so they're paying a lot more. And in addition to that, lenders are requiring borrowers to have to escrow for interest rate cap, a future interest rate cap, right? And they're calculating that like every 6 months. And so that in itself, can put a pretty big dent in your mortgage payment, right? All that to say is to say that we're expecting to see a lot of good opportunities in 2023. And so it's just a matter of, being a little bit more patient, seeing where pricing was in the past, seeing where cap rates were in the threes, fours. We're going to be seeing, cap rates in the fives and sixes, and we already are. So, just finding the right markets, finding good operators that you can trust. And I would say, try to be as patient as possible, because there's going to be more opportunities, than we can handle, I think. If you see opportunities, to jump on them, because there's a lot of institutional capital on the sidelines that are also waiting to come in. And then, if you don't take advantage of these opportunities here over the next 12 months, then they may just be short-lived, and institutional capital is coming back in. So then you're competing with those guys, and there's going to be less opportunities for us.
That's a really good point. And I kind of want to break that down a little bit further, right? Because you said it depends on your goals, right? Depends on whether or not you want to be active or passive. As we both know, when it comes to being a passive investor, much of this really just relates to finding an operator that you trust, finding a market that you like, and simply writing a check. And that's it. That's all you really have to do. But when it comes to being an active investor, especially in today's economy, I guess what strategies would you recommend for someone who is trying to find this deal in this type of market? And as you're saying, in 2023, we may see a little bit more opportunities, just because some of these operators may have over leveraged and may be finding themselves in a situation where they need to sell at a discount. How would you suggest someone who's trying to get first started into this type of opportunity, what would you suggest that they do?
Yeah. So what I would suggest is that if they don't have they have zero experience, then obviously educate yourself. First and foremost, right? You have to start with education. But if, once you have a little bit of education, then, reach out to somebody who has done it before is my recommendation, right? You could, do it yourself, but then, you may also, be subject to several costly mistakes. So I would say, reach out to someone who has done it before, try to get their opinion, try to get some opinion from them, some recommendations, and maybe even possibly partner with that person, right? Because it'll really help you on the mistakes, right? So I would say that, and they're going to have more experience with understanding of the market, of cap rates, lender relationships, just all of the above, broker relationships. And so I think that's really the easiest path to success. If someone is getting started, is just look for someone that you can trust, someone who has experience, someone who owns the kind of properties that you would like to own, and build a good relationship with them, good friendship. Offer them something of value. Try to find them a deal, and then you guys can work on it together. And I think that's really the easiest thing that you can do, because you do it yourself, kind of like the way I did it. Then yeah, you can be, you can be prone to some mistakes there, right? So that's the whole goal, is to try to reduce them as much as possible.
I love that. Really good points there, Juan. And so before we dive into our Freedom 5, I just wanted to kind of ask you, what does your life kind of look like now that you've jumped outside of your W-2 job? You're now in Genwealth Capital Group as head of operations and asset management. You have a ton of units in your portfolio at this point. What would you compare your life like now as opposed to when you made that decision to jump back when you were still working your W-2?
I would say number one is a lot less stressful. A lot less stressful because you're working 8 to 5. There's a certain you have a certain schedule, and I have a certain schedule now too, right? But it's just a grind, right? The daily road trips, right? It's just a lot more stressful. I would say that now the flexibility that I have, more time with family. Set your own schedule. I think that alone is worth it. But it does come with a different set of challenges, right? Don't want to paint a rainbow and just flowery picture either, right? There's different set of challenges in that challenge that we have to face now are hey, what's going on at the properties? We face different challenges at each specific property, right? Sometimes there could be a fire. Sometimes there could be somebody that's you know, there could be theft. There could be, just on and on, right? We had a freeze, right? You guys are used to the freeze up north, right? Or cold weather, but down in Texas, we're not, right? So recently in the last month, we had a freeze. And so what happens with that, right? You have some units that could go down because some pipes that burst or whatever, right? So it brings us a different set of challenges, but, I wouldn't, I would say that I would do it all over again. Definitely, because of the freedom that it does provide and the flexibility, both monetarily, both from a spiritual side, health wise. So it just the whole package is what I would say. So it is definitely worth it.
I love that. I love that. All right, folks. So we are coming towards the end of today's show, but before we finish, it is time for the Freedom Five. These are 5 questions that we ask every guest on our show, starting with the most important question. What is your why? What is the underlying motivation behind everything it is that you do?
Yeah. So, I would say a couple of things here, right? So really it's, providing a better future for my family and myself. But, if I'm really, really being honest, and that is, being honest right there. But if I dig a little bit deeper and I try to find out what is my real why, I think it's just me proving to myself what I'm capable of doing, right? Just trying to go out there and maximize my potential. And I think that's really, really my why. And, it's easy for me to say, I do it for family and all that. And I think that's the easy answer, but I think it's just me trying to prove to myself and trying to maximize my potential. And, before the end of, time, I can look back and say, hey, look, I'm proud of myself because, I got this far. And I think that's really my why if I'm 100% honest.
I love that. Angela and I, we've actually been looking into other business opportunities. Real estate aside, we've also been looking at business acquisitions as well. And we took a survey last night. And one of the premises of the survey is to determine how much of an entrepreneurial spirit do you have. And a couple of those questions include like, how much are you willing to take ownership of the results in your life, whether that be good things that happen to you, bad things that happen to you. Another one is like, how much time are you willing to dedicate towards yourself and towards your business? And how much accountability are you willing to have for yourself? And these are type of questions that like a typical entrepreneur who would be well versed for this type of field is willing to take this ownership, willing to prove to themselves that they can achieve whatever it is that they want to achieve because they have control over it. They have an internal locus of control. And people who may say, oh, well, it depends on outside variables that they don't have control over, that almost like victim mentality. They may not be best suited for being an entrepreneur. And I got to say, Juan, just based off what I've heard right there, I mean, it sounds like entrepreneurship is the way to go for you, my friend.
Appreciate that, man. Appreciate that.
Question number 2. What book has had the largest influence on your life?
Man, it's, honestly, it's not just one book, it's several. There's several books and like behind me, you can't see it, but like I have a lot of books out here. And so I love books, but I would say if I had to pick one, I would say How to Win Friends and Influence People. Yeah, I think that's just like, it should be like a staple for every person in general. And, if you're an entrepreneur, you're dealing with a lot of people as well, right? So I think that's, just a good overall fundamental like book, that everybody should read and reread several times. So I would say that one.
That's a great book. Yeah. I mean, interpersonal relationships are everything. And like learning how to navigate those on a day-to-day basis, having that level of not just intellectual, like the IQ, but also the EQ, is something that a lot of people have been doing research on because, as you said, relationships are everything, especially in real estate. It's a business of relationships. So navigating that is huge. Love that. Third question we have here. What is the most impactful thing, whether it's a piece of technology, a habit, or a person, that has helped in freeing up your time?
Yeah, that's a great question because there's multiple I guess pieces of information or platforms that we use like on a daily. So that's a very good question to kind of pinpoint it down to one. But I would say just a simple we use Google for everything. I do on the personal side, and then I also we use Microsoft like Teams, and that's great for everything. Just being able to communicate as a team, to store files. It's like just a one platform for all. And I think that's really I'm just labeling technology right now, but I would say that's one of the best pieces of information and technology that we use that really helps us to keep our heads on straight.
Yeah, keep everything organized and centralized, right? Yeah, we love that. Yeah, we actually use a couple project management softwares. We use Monday and we use ClickUp. Both of those have kind of served those similar purposes and making sure that everybody's on track with the day-to-day stuff. Question number 4. What is your number one piece of advice you would give to anyone looking to achieve more control over their time?
Number one piece of advice, I would say that you have to be willing to take action, and you have to be willing to put in the work, right? Because nothing is ever given to you, and you have to be willing to make those sacrifices. So take action. Once you have enough education, then you have to be willing to pull a trigger, because it doesn't happen for you, and no one's gonna care if it happens to you or happens for you, or if it doesn't happen, right? You have to do it yourself.
Absolutely. Yep. Yeah, you're absolutely right. Yeah. Indecision is a decision. So you can kind of learn as much as you want, and it's good to have a good foundation, but at some point you just got to take action, right? And take accountability for that. I love that.
Right. Mm-hmm.
Fifth question we have here, Juan. What is the best way for our listeners to get in contact with you?
Yeah. So they can visit our website. That's genwealthcapital.com. There's ways there that, you can find our Calendly links. If someone wanted to schedule a call, or, you can see our email there. They want to reach out to me directly. It's Juan@genwealthcapital.com. I'm also all over social media. So if, someone wanted to reach out to me there, that's the Juan Vargas. Best way would be website and email.
Love that, Juan. Well, Juan, tons of really good information today. I really liked how you talked about your transition from the W-2 into being a multifamily investor. I loved how you were able to compare the differences between managing a single family portfolio as opposed to a large multifamily portfolio. And I like how you kind of broke down the differences between what it looks like as a passive investor, as well as the things and responsibilities that it looks like as an active investor, especially as you continue to scale up. I just want to thank you so much for being a fantastic guest on our show today, and I really look forward to remaining in touch.
Hey, thank you, Chris. I appreciate the opportunity, and thank you for your time, and hopefully your audience was able to get a good point of advice or two from there.
I love it, man. We'll talk to you soon.
Thank you.
Now, if you like this show and want to learn more about how we can help you free up your time through passive real estate investments, check out www.freedominvesting.com. Make sure to subscribe to our monthly newsletter and schedule an introductory call with our team. We also have a free 7-day course on what passive real estate investing is and how to get started so that you can start your journey towards earning back more time in your life. To all of our amazing listeners here on the Freedom Investing Podcast, my name is Chris Toribio. Till next time.